there you have it, the closing bell at the New York Stock Exchange, ending another day of trading on Wall Street, the first day of the month. The Dow Jones spent most of the day in the red, but made some late afternoon gains, ending up about 146 points.
Yeah, the S&P 500 ended the day with slight gains, around 0.3%. The Nasdaq saw some losses, ending down 0.2%. So a mixed bag today anyway. And it's like, do my eyes deceive me? Do I see green on the market right now? Marley Kayden is an economic journalist and professor at DePaul University. She joins us now to talk about what we're seeing. Great to have you with us. So what were some of the primary driving factors behind the market today? It seems like a bit of a mixed bag, relatively flat.
It is. It was a bit of a mixed bag. We saw a lot of volatility today. That's what we saw. Some of it is in response to our unemployment numbers, the weekly numbers that came out this morning. They were better than expected. There were 232,000 people that filed for unemployment for the first time. That was a decrease from the week before, our third straight week of declines, and they were far better than what was expected. So that was some positive news. Another manufacturing report came out saying some more positive news. So I think we had two volatile responses. Some people said, yes, great news. Other people said, oh no, this could trigger what we don't want, a high interest rate hike from the Fed. So it was sort of a tale of two stories today, fighting their way out in the market, all in anticipation for tomorrow's jobs report.
Right. So, you know, as you mentioned, Marley, those weekly initial jobless claims fell to actually the lowest level in more than 2 months, which is something. So what does that tell you about the state of the job market? It clearly still remains tight, no?
It is. We have a very strong job market. It is very tight. While that sounds like great news, and some people chose to take that as good news today in trading, it's actually not great news for our fight against inflation. A positive job market means that workers, and because we have so many available jobs and so few people to fill them, workers can ask for higher wages. This means that companies, to cover those costs of giving people more money, have to raise the prices of their goods and services, and that just contributes to inflation. So it's a bit of a good is bad and bad is good scenario here.
And so then you had mentioned the monthly jobs report that comes out tomorrow. What are you looking for, and then what are you expecting to see?
The general expectation out of the report tomorrow is that we'll see about 300,000 jobs added to the economy in August. Now, that is less than the huge number that we saw come out in July of more than 500,000 jobs. But it does still show a really strong labor market. The concern here is if it comes in at that number or it comes in higher, it could signal to the Federal Reserve that they are not doing enough to fight inflation. And we could see another jumbo-sized rate hike coming our way in mid-September at the end of their September 21st meeting. The other thing that people have a really close watch on in tomorrow's report is how much wages are rising, because that's that real inflationary driver. As people get paid more money, we're thrilled, right? We all want more money to do the same job. But because of that, prices have to continue to rise, and it creates this vicious cycle that only further adds to inflation. This will be what the Fed has its eye on. As long as waiting for that inflation data that comes out September 13th, those two reports will be the two reports that help make that decision, whether or not we see a 50 basis point hike come out of the Fed, which would be less than the one we saw last time, or if we see another giant 75 basis point hike come out to try to lower our inflation.
Yeah, everyone is eagerly anticipating that Fed decision. All right. Marley Kayden, economic journalist and professor at DePaul University. Thanks so much. We appreciate your insight.
Thank you.